Now we'll pick up right where we left off. We have just been looking at this action on the 11th, which was Tuesday of this week, and this is Wednesday. Now this is yesterday, and this was a unique day that always requires special attention and different strategies, as it was the Federal Open Market Committee announcement, which comes out usually around 1:15 Central Time. But nevertheless, there are still some things we could have benefited from. Actually, I made a few trades in the morning, and so there were opportunities there. I traded the euro as well, which was quite good actually. But looking at the chart, still you have some very clear we signals and setups if you
Pull
like
back
to
down.
if you like to trade right off the open. We had seen on Tuesday that it was very clear that the value area low was thoroughly tested, and that there was plenty of demand from the bigger money at that level. So we really, when we saw it open right there and then take off on the open, we had to really recognize that as a clear signal that the market was done spending time down here. And this is our value area high from this area of trading. So once we immediately broke out in the first 15 minutes, you got to start looking at smaller time frame, small pullbacks to get on. That's really it's really what's available to you if you're not a breakout trader. If you're a breakout trader, whatever you like to do, above the 5-minute bar, the 10-minute bar, the 15-minute bar, whatever you do. Nevertheless, the patterns still apply. You know, the S&P is usually going to give you counter trend opportunities, and you had one here briefly right at noon, because that still gives you an hour before the an hour and 15 minutes even before the announcement. But you also know that this is a very common pattern for the last really all of 2009. They have been tending to have these grinding, slow, upward moving little choppy little segues higher up into the announcement, and then generally on these days you have like 3 swings. One goes one way, one goes the other way, one goes the other way. So this is all pretty consistent, but that doesn't mean it's something that most people can trade effectively, and it doesn't really respond to our signals in the same way, but on the bigger picture it certainly is, because it stayed above value the entire day. So that would have given you one basis for recognizing that this pullback, which happened to just be pulling back almost exactly to the value that had been established during the day, the value area low. So there were opportunities there to bottom pick a little bit if you're inclined to trade on these days. But you did have a good sell here. Once again, the delta reversed right on this very narrow range bar, and you know, whatever, your stop could have been 5-6 ticks anyway. So but it was a clear signal that volume had peaked on this bar, dried up completely here, and evened out buyers and sellers. So that's about it for what you saw there. But this value was established, and then this becomes important for today's trading, which is Thursday. So let's look at that. Now Thursday gives us a lot of textbook pattern behavior, and it is a good example of easily recognizable setups when the market is trading in value from the prior day or days. But just to give you a little more information now on all these lines you're seeing, this is a different chart than I've shown you in earlier videos. Just the previous one in this video, we're introducing it. But basically what you have here is the value area, which was built the day before. We give it a different color on this day, this kind of olive color. So those are the two value areas, 107.75 and 101.25, value from the previous day. And the point of control is peach, as it was built yesterday, and we give it this little light pink color on the following day. So you can see how the market played off of these levels throughout the day, and as it was building its own value, the value it was building was a little bit higher, so it was slightly upward bias as it's beginning to probe that other area we talked about on the previous video. So and what you also see here, what I've done is I've constructed around these simple candlesticks the value for a half hour, and these are 15-minute bars. So the value of each half hour gives us a value area high, low, and point of control, which is represented on the subsequent bar by these yellow lines. As it's building, it builds the orange line, and then these pink lines are the point of control for each individual 15-minute bar. Now, if that looks cluttered, don't be too daunted by it. I'm blowing up this chart wide for the sake of it being easier to watch on these little tiny Camtasia YouTube videos. But what they give us are really precise levels for entering trades when the market pulls back to value from an earlier area of high volume trading. Now, what you see here in the morning is it sold off at first, these 15-minute bars. So this takes us right up to 9 o'clock, high volume, and this is another pattern that can occur if the S&P just if it's going to have an upward bias, it'll do all of its sell-off in the first half hour. Now, of course, you didn't know that at that point, but you did know that it immediately after breaking value for 5-10 minutes, it immediately reversed back into value, and that's one of our patterns. And notice it did that on increasing positive delta, but that's not yet a convincing pattern. But the fact that it resumed trading inside the value for the day is very bullish that it would at least reach the upper value. And that's a common pattern when you break out a value for and it's not confirmed with a following 15-minute bar, for example. That's actually very bullish if it's probing to the downside. So this value here, even on the 15-minute level, the point of control was right here at 999.50. So right at the very strong round number there of 1,000. There weren't any closes under it, and it reversed back up to 1,000, almost 1,002 area. The high of this bar was way up here at 1,003. So when you're breaking the lower value area by 3-4 points, that's a pretty good sign that the low is in the morning, and you're on positive delta, and here you had increasing volume and decent volume on the run up for what we've been having. And then up at the high, you had a good signal that might be a temporary high because the delta reduced dramatically, so people were willing to step up, and there was enough supply there to send the market into a sideways range for a couple of hours. So once again, the volume here, that's actually, it's not the most useful pattern, but it is a pattern. When you see that there's no conviction either way and you're in a 2-point range, that's usually a good time to either step aside or just take little scalps with a positive bias, because we have a strong bias that to the upside on this day. But on this high here, now we have a classic signal. Now at this point, value had been building. It was pretty clear that this was a value area, upper end of value here at this point in trading already. And you had a spike through that was dramatically rejected on this long stem. And the point of control was way up here. And on this high bar, value, the delta was actually less than 0. So the sellers won this battle, and it was on pretty high volume relative to the previous couple of hours. So that is a clear sell signal to take. And when it came down, we had once again our classic pattern. The delta reversed on the low bar, reversal bar closed higher, and that took us up strong into the close. So this pattern is our #1 favorite. and you'll see it day after day after day. This one is one to put the money on. Especially when it is right at this key area of the lower end of the value that had built throughout the entire day, couldn't close below it, and even the point of control here that was for a pretty good period of the first hour of trading, the low of this bar was 2 ticks above that. So these are our levels. They are very, very significant. That's where it stopped on the pullback when it finally got back down there. This was actually a naked point of control. But the value area of the day was there too. You had your delta reversal. Classic setup.